Okay, and this preparation puts everything together. Okay, we must know that information in the financial statement is the output of the accounting system. Okay, let us recall that we defined or described accounting as a process. A process that seeks to record transactions that will classify, summarize, and analyze. Over these few 6 weeks, we've been going through that process, okay, where we initially looked at transactions. Based on the transactions, we went through the recording process, understanding the fact that the journals are the first point of recording. Okay, based on the journals, we go into classifications through the ledgers, where we classify the information based on the type of accounts and based on which ledgers they should be. Now, in the same ledgers, we could do a summarization, okay, after classifying. So once we have classified, okay, we ended with a trial balance, and then we can summarize. Summarization is just accumulating the same information or the transactions about a particular item over a period or for a period. And we summarize and prepare the reports which we are going to be looking at. Okay, and so that is it. For the analysis, okay, it is making meaning out of the financials that we have prepared. Now, this session, we want to look at that final output after going through the process of recording and processing. All what we have been doing have just been recording and processing the accounting information. Okay, from the journals to the ledgers. Then we looked at control issues, how to control the transactions through the control accounts. Then we also looked at cash, especially cash and bank, how we can control, put in control measures with respect to cash and bank. We ended with preparing the trial balance at a point. And then we moved on to certain adjustments that are required to these transactions that have occurred at the year end. Okay, and that is where we ended on Tuesday. Today, we want to put all together in an omnibus report we are calling the financial statement. Now, at the end of this statement, who is a zip or whoever, at the end of this session, you should be able to prepare a basic income statement, okay, for a sole proprietor. At this level, we will not take you to other entities, other business organizations. We have different business organizations depending on what they do. But at this level, the expectation is that every student should be able to appreciate and prepare a basic income statement of a sole proprietor, a one-man business, okay? And then we should also be able to prepare the financial position, which are all reports generated from the daily transactions. Now, these are recommended text, okay? What is the income statement? What is the purpose of the income statement? Just by way of recap, who can help us? What is the purpose of an income statement? Charles Lamptey. Charles Lamptey. Charles Lamptey. Okay, Roseanne. Roseanne. Roseanne, we can't hear you. Roseanne, we can't hear anything. Prince Opoku. Prince Opoku.
Hello, madam.
Yes.
Yes, madam. Yes, madam.
Yes, what is the purpose of the income statement?
Madam, it is prepared to determine the profit or loss of a sole proprietorship.
Okay. It is prepared with the intention of determining how much profit or loss, okay, a business has made, okay, for a period. Let's be mindful of that, for a period. Abigail Awuni, what is the content of a typical income statement? Yes, what is the content? Abigail, I saw Abigail's hand up. What is the content of a typical, yes, Solomon?
Please,
what will you find?
In the preparation of the income statement, we need our revenue and expenses.
So in the preparation, we need revenue and we need expenses. Okay, let us recall that a week ago or sometime past, we talked about revenue and we talked about expenditure, capital expenditure, capital, okay, revenue, okay, and we talked about the revenue itself. So that is what we profit-oriented intention. But for all other businesses and anybody who tries to do something, most often the intention is to make profit. And so in the income statement, you find information about whether we indeed are making the profit or we need to step up our game. Okay, and most often refer to it as the performance. Anytime you want to determine whether you've made profit or loss, then your intention is to determine how well you are performing on the activities that you are engaging in, because that is the daily activities you intend doing. Okay, and you must make sure you are performing on that. Now, in the income statement, you have two sections for the purposes of what we are doing now. Okay, we have the trading account and the profit and loss account. Okay, we have the trading account and the profit and loss account. Now, the trading account is prepared to derive how much gross profits. Again, these are terminologies just to describe what happens at each point. So when you hear gross profit, it's just looking at the profit you are deriving in the trading account. Now, what is the trading account? The trading account reports your core activity. You are engaged in buying and selling water. That becomes your core activity. And that is what you are trading in. So at every point, we want to know how much did you sell, okay, in terms of the water for the period. So if you are preparing your income statement from January to end of March or end of April, okay, then it is income statement for the period ending April. And it means that you are telling the whole world that from January to April, you want to know how much revenue, how much income you made from selling the water. That means how much did you sell the water for? Sales. So how much sales? How much have you sold for just that period? Then you come and deduct all the direct costs related to the sale of the water, related to that quantity that you have sold for the period. So for instance, if you are selling, maybe you would incur transport charges, maybe to you try to pay for it for them, labor costs. And so once it is directly related to the sales, okay, we say it is direct cost. Okay, it is a direct cost. And so in the trading account, you determine your gross profit. And that gross profit just relates to how much sales you have made minus the direct costs in making that sales. Okay, the direct costs in making those sales. And so it is denoted by the net sales. By now, we should know what net sales represent. What is net sales? What does net sales represent? Agnes Dapa, net sales. Agnes Dapa, what does net sales represent? David Appiah. Yes, Roger.
Madam, please, net sales is the actual amount of goods that cost business sold out after there have been all returns.
Okay, I am asking this because sometimes you would have sales.
That's the amount of goods that the business sells.
Sometimes you would have sales, you have returns. So next is you sold it. It's known as the cost of goods sold. In some textbooks, you see it as the cost of sales. Okay, but what we are going to buy today. So if we envisage that on Fridays, because of the weekend, people buy a lot of water. And so today we requested for 150 packs. So the 150 packs plus the 20 would give us the total. Then we add all the carriage costs. When you go and buy, the transport costs related to, okay, the labor costs, you would have to add all. Okay, let us again go back to the cost of the asset. We did that last week or so, where we said that the purchase price plus all ancillary costs that is expected to bring the asset to its usable condition is also part of the cost. So you have carriage inwards. So for goods, normally it will be carriage inwards, okay? The cost of bringing the goods into the warehouse or our place of sale. Then we'll subtract return outward. So for the period, if there have been goods that we think does not meet our specification and return, okay, then we take that out and then we add other purchase costs. Then if at the end of today, after doing all this, we have only 5 packs left, let us note that we will take that 5 packs out because it belongs to tomorrow. And so we take it out. What is the intention of the cost of goods sold? Remember, we have a specific amount that we claim we have sold for the period. How much did we incur in cost for those group or those quantities that we have sold? And so the cost of the goods we have sold, we need to determine the cost. Let us note that cost plus profit will give us the selling price. So the cost may be lower, okay? And so we only make profit when the selling price is high minus the cost. And so it is that principle that we are bringing here, okay? And not too far from what we do on a daily basis. If you go to wherever to buy anything, you are buying it at selling price, but the cost to the business may be lower. We're trying to determine the cost to the business, okay? And we take it from our sales to give us our gross profit. And that is found in the trading account. Okay, that is found in the trading account. Now, in the profit or loss, now it's not even profit and loss, it is profit or loss account. We derive the net profit. In the trading account, we derive the gross. In the profit or loss account, we derive the net profit or loss. Now, what is the net profit or loss? So this time, after looking at all other expenses that may not directly, okay, go into the product, but would also have an indirect impact, or indirectly we spend on certain things to help us to facilitate our selling process. Perhaps we have done adverts, but we cannot go and say we are doing advert only for one product. We are doing a general advert. Once we do a general advert, we cannot say that it is part of the direct cost because it may not be directed purposely for a particular product. And so that will come as an indirect expense. Okay. If we have a fuel, if we have a motor van that we use to facilitate, and the motor van does other things, okay, if we cannot strictly know how much the fuel for the direct and the indirect, then sometimes they send all to the indirect. So in the profit or loss account, you find all the other expenses that may not directly be attributable to the sale of those products for the period. And so it is captured as the gross profit or loss minus the indirect expenses to give us the net profit or loss. This is a very typical income statement, very basic. Okay, if you go back to your slides, I keep telling you, you find every information if you pay particular attention. We have tried to guide you every step of the way. Unfortunately, I don't get the feeling that students are going back to it. For those who are doing, you would see that every information, every step of the way, we are guiding you. Okay. So we have the sales less the returns. Then you see we have the cost of the goods sold, and all the information we have there, we have put them into the structure for you to arrive at the gross profit. Now, if you recall, we talked about discounts earlier on. We talked about rent received, okay, as a revenue, okay, income. We talked about disposal when we're talking about depreciation. We talked about provisions as adjustments. And so if you don't get it, go back to the slides on. It means that we are making more income, and that is why we are adding it to our income or our revenue. Okay. If we are making a profit on disposal after using the assets, if we still sell and we make some money, okay, the amount we are able to sell it for is higher than the cost, then we know we have made a profit on our disposal. Okay, and that gives us a revenue income. Then we have all the indirect expenses. This, let me say, are not exhaustive. Okay, these are not exhaustive, but these are just some indicated revenue expenditures. Rent and rates, insurance, you can have adverts, you can have admin expenses, okay, carriage outwards. So when you carry out, it is an expense. When you carry in, the cost of carrying it in, it is part of the cost of the goods. Then we have bad debts. Again, we talked about bad debt. It is debt that has been completely wiped off. We want to wipe it off our books. We hit it against our profit. Okay, an increase in provision. Okay, I told you provisions are just some set aside. So once it is going up, it is just the difference that we bring here. And look at it, the decrease becomes an income. Depreciation expense account. Again, cast your mind back to the depreciation expense account and the loss on disposal of fixed assets. Like I said, these expenses are not exhaustive, okay? But just to give you some guideline on the expenses. But for your trading, this is just what it's supposed to be, unless the question states that a portion of a particular item relates to the trading account, then we'll have to capture, okay, it as part of the cost of the goods sold. Any question? So we move on to the statement of financial position, okay, which is the other one we are going to learn about. I told you at this level, it is just by way of introducing you. For those who continue, okay, we go to other financials of other entities. There's so many legal entities. We have partnerships, we have company, okay, even within companies, we have different varieties. And then we also have different industries and the terminologies they use. Okay, so as you go higher, you broaden the horizon. But for now, this is what we would be looking at. Again, oh, okay, there's somebody. Emanuela, which one is the horizontal method? Emanuela, which one is the horizontal method?
Hello, madam.
Yes, Emanuela.
Hello.
Yes.
Madam, please, I'm talking about the trading profit and loss account. Madam, please, we have the horizontal method and the vertical method.
Who said it?
So I'm trying to ask.
Emanuela, let me even pause you there. Who said you have the horizontal and the vertical? Your SHS said it.
Yes, madam.
Okay, so let me make this point clear. That came up yesterday as well. Okay, as you go higher, you must streamline things. And for the university, the position is to prepare you for the world of work. So in the world of work, okay, whatever method is most appropriate and applicable is what you'll be learning from now on. So don't forget about vertical and horizontal. We don't have that. The standard, let us recall that this is a profession. And so the profession has appropriate ways of doing that. And every time it is changing. Okay, when I was doing accounting, yes, I can understand why you are saying vertical. So we had the profit and loss account like a T, like an account. So it was, and at that time it was called the profit and loss account. Today it is not called an account. So you see how the profession evolves. And I'm sure in your SHS and at the lower level, they are still teaching you as if it is an account. That is why you would say the horizontal, because that makes it more easier. But today it is a statement form. So what you see here is a statement where you have the positives and the negatives. Do you get it? So as much as possible, let us try and adjust. Okay, I know you have a nice way, but we will not encourage that. Otherwise, you will end up and go to the world of work and be asking or telling them that you want to prepare it in the horizontal, but that is not practice. So that has changed. Okay, that is how I learned it some years ago. But today, it is no more the profit and loss account. It is the income statement. It is the statement of financial position. Okay, those times it used to be the balance sheet. So it was a sheet and you had to balance both sides. So at those times, you could do those vertical or the horizontal, as you are calling it. Okay, but today it is all statement of. So let us keep practicing with that. Okay, and this is to all of you. That's why I had to stress it. So
Thank you, madam.
Again, we recall the purpose of the statement of financial position. So whilst the income statement period could be January to June, it could be January to December, it could be January to September, that is a policy of the entity. The statement of financial position is at a point in time. So we can prepare our assets, liabilities, and equity as at today. By tomorrow, it has changed, okay, through the transactions that we did. And I know we did that when we saw the effect of changes on the accounting equation. So again, let us bear that in mind. Okay, now the statement of financial position captures the balances of assets, equity, and liabilities. And that is the accounting equation at every point in time. So your assets could increase by the close of today, causing it to change. By the close of tomorrow, it could decrease, it will change. And that is why we say it is at a point in time. And you must always note those points. It shows the financial position at a specific point. Okay, this is a typical statement of financial position. Again, we have gone through virtually everything. I'll just take a few minutes to do that again. When we started off knowing the content. But as we went through depreciation, we talked about the consumption and how to allocate amounts for the assets consumed, the portion of assets consumed. We recognize we have to, we recognize that as depreciation. And so last week, we talked about depreciation, okay, the provision for depreciation and the depreciation expense. And so in the statement of financial position, it would match the yearly amount consumed against the cost to give us the net book value, okay? If we have some investments, okay, either on the stock market, then we can use it at the value, the market value of that stock exchange or the stock price at that point, okay? Then we have stock, okay, another name, inventory. We have debtors, another name, receivables. We have looked at it. We also saw that debtors or receivable, you must always less the provision for doubtful debt. Please don't worry that it is bad debts here. In some texts, it is used interchangeably, okay? So some would say provision for bad debts. Sometimes even as we are used to that, okay? But in order to help you distinguish, we use the doubtful debt. So if we say provision for bad debt, it is still a provision, and it is the doubtful debts we are referring to. So they are used interchangeably. Again, you recall our adjustments, prepayments, expense as, okay, so we cited the example of you people having paid your hostel fees in advance, and that is an asset to you. Then we also talked about accrued income. Okay, so rent that is due you but has not yet been paid. Then the balance at the bank and the balance on cash. So the reconciled figures would have been captured in here. So everything we have done, we are bringing the values at the end of the period together in a report, summarized, okay? Then we go to the current liabilities, creditors or payables, accrued expenses, prepaid income, the bank overdraft. So where we have the balance at the bank having gone into the negative, it is referred to as the bank overdraft. So now let me, okay. If you look at how it has been captured in some textbooks, here we have the current assets minus the current liabilities to give us the working capital. And that is the amount that you are working with within every year. That should easily change hands. In other textbooks, they may have the non-current assets plus the current assets. That will give us total assets. Please, if you are not already conversant and you want to follow, just follow this one. There are various ways we can still present this in a statement form, depending on what meaning we want to make out of it. But for purposes of our lectures, please, let us adopt this one. We are not going to ask you to do the other method. If you understand it and you do it, it's fine. And that is just non-current asset plus current asset, giving us total assets. And then the current liabilities plus long-term liabilities plus equity would also give us, that is the accounting equation format. We don't mind, okay? Then we have all that financed by, so all our working capital. So you see, in accounting, information helps users to make decisions. So how we have presented in this way should help somebody, because we are saying that your current assets minus your current liabilities will give us the amount that you are working with during the period. Then your non-current assets are things that hardly changes. Now, how do you finance all this? How much capital do you have? And how much long-term liabilities? Okay, so giving us an idea of the amount of loans that you have to support your business and how much capital the shareholders have contributed, of course, plus the net profit from the income statement, minus, okay, any cash or goods drawn by the shareholders. And that gives us that is the ending part of the statement of financial position. Okay, the most important thing is to know the content, okay, and to know how to present it, and that is it. Any question? Yes, Louisa.
Madam, please, with the statement of financial position, is there anything like capital employed?
Yes, Louisa, as you go further, I've told you that for this level, we are looking at very basic things. Okay, so
Okay.
come again.
I said, okay.
So indeed, if you add your total, your non-current assets plus your working capital, it gives you your capital employed, your total capital that you are using to work. And the other aspect looks at how you are financing that amount that you are using to work. Okay, but sometimes I refuse to use technical languages, okay?
Okay.
For the purpose of those who may not have prior knowledge, okay?
Okay, thank you.
Okay, any other question? Okay, so I sent a question to your reps. I hope we have gone through it. We are going to quickly try and see whether we can finish it. We just have one more hour. I'm going to go through the questions and go through it. We are going to go through every aspect of it, note it, and please, if you give me garbage, we'll put garbage in. Again, let me say that because it looks like students, once you don't pay attention during the question discussion, okay, and we don't finish it, it becomes a problem. So please, as we go through the question, let us note. Everybody has a question. I know, I'm sure you all have soft copies, but at least make some slight notes in your book just to be mindful so that we don't repeat those mistakes, because whatever you give me, okay, I would put it in. But if you go back and then you now realize that what we did was wrong, it is not because I want to show you the wrong thing. It is because you people are providing me with the information. Unless if I have to go back and forth, then we are going to spend a lot of time. Okay. So maybe today I'll try that. I'll have to be going along the way, back and forth. Any question before we look at the question? Okay, so let me see. Okay. I can't find my question. Okay, see. Okay. So who is going to read for us? Somebody read. Let's read from the additional requirement information first. Okay, somebody.
Louisa.
On 30th December 2017, Joycelyn decided that 1,000 Ghana cedis of the receivables balance should be written off as irrecoverable debt. Provision for doubtful debt is to be adjusted upwards by 200 Ghana cedis. Electricity bill outstanding amounts to 500 Ghana cedis, and a quarter of the total electricity consumed relates to trading, whilst insurance.
Okay, who is reading?
Madam Louisa.
Okay, Louisa. So before we even go through, I've realized you have read. I guess everybody is familiar with this table. Okay, this is the trial balance, which we did when we prepared the journals and the ledgers. The end result was that the individual accounts with their balances are moved to the trial balance. And I hope that we are comfortable with it. Now, anytime you have additional information, it only tells you the necessary adjustments that must be made, and that was identified at the end of the year. Okay, so your trial balance would contain information that has gone through the accounting process, transactions that have been captured in the course of the year. At the end of the year, there may be additional information. What it means when you have additional information is that these have not been considered. So you need to record, okay, in accounting, they'll tell you need to record twice. What does the twice mean? You need to now apply your double entry. For those in the trial balance, the double entry has been done already. For additional information, the double entry must happen. So you may have to open your ledger accounts in order to pass the double entries. And let's take note of that. Okay, that is what I want to say. So let's take the first one. We are going to go through it with the mindset that we will put some notes down. Once I go off and I start putting figures in, again, let me say it. If you fail or overlook an issue, it means that it is going unnoticed. So the first one, Louisa, read for us and let's do the analysis.
On 30th December.
Okay, hold on. Paul, what is the issue?
Madam, please, I want to ask, what if there's a decrease in the provision? So with that one, will you add the provision to the receivables?
If there's a decrease in which provision?
Let's take it that the previous year provision is greater than this year's provision. For the receivable, how would you treat it? Would you add it to the receivable or you still subtract?
Who would help our brother out? He's a bit confused in his mind. Where will you treat a decrease in provision?
A decrease in provision become Solomon.
Okay, I didn't hear you.
Madam, I was saying that a decrease in provision become an income to the business. So, like, let's say last year, what they provided is greater than this year. That means you have to find a difference between last year and this year, and what you get become an income to the business. So add it to your gross profit.
Paul, are you okay?
Madam, I was asking about how it will affect receivables in the statement of financial position.
So who would help him out? I've seen Johnson's hand up. Johnson, Paul wants to know whether it will affect or how it will affect receivables.
Okay, so the current provision, for the current year will be subtracted from the receivables in the statement of financial position.
Paul, do you get it? So
madam, regardless increase or decrease,
so
you have
in
to
the
subtract.
statement of financial position, it is not the increase or the decrease that goes there.
Okay.
In the statement of financial position, it is the end result. So let's assume last year's provision was 100 cedis. In the statement of financial position is the 100 cedis. This year it is 80 cedis. The difference of 20 is the decrease in provision. That would be an income in our income statement. The 80 cedis is what goes to the statement of financial position.
Okay, very clear.
Okay, thank you.
It will still go, why do you subtract it?
Yes.
So subtract it from your total debtors.
So what are you subtracting? Is it not the point in time, the current provision, the total provision? That's what he wants to know, not the increase or the decrease. Do you get it? Yes, Louisa.
On 30th December 2017, Joycelyn decided that 1,000 Ghana cedis of the receivables balance should be written off as irrecoverable debt. Provision for doubtful debt is to be adjusted upwards by 200 Ghana cedis.
Okay, so what entries should we pass? Straight. What is the issue here? Paul, I've already made a very basic principle that anything you find in the additional information has not yet been recorded. And so you would have to record it, okay, based on your double entry. So, Paul, can you help us with this one?
Madam, so this one, you take the Joycelyn bad debt as an expense and also subtracted from receivable as a statement of financial position.
So Paul, normally when I say you should help us, I'm more interested in what are the double entry? Okay, what double entry will be passed and what accounts will be affected? Once you can clarify that in your mind, when you are opening the account, you are very sure.
Okay,
Yeah.
you credit receivables and debit
Get it, you're almost there, Paul. Oh, Paul.
Please, can we help?
Okay,
Madam,
Roger wants to help Paul.
And you debit your okay, madam.
Roger, help Paul.
But you credit your receivables, debit your bad debt account,
Bad debt
and debit is as an expense.
Okay, so you credit your receivables account and you debit your bad debts. They say it is irrecoverable. Once something is irrecoverable, it means you cannot recover. So it is bad. Okay, this one, it is English language. So if you didn't go to this thing, you don't understand English language, that one I can't help you. Okay, so once it has been suggested that it should be written off, I told you that anytime something is bad, you take it off. Okay, so Paul, that was a good attempt. Okay, this is how we do it. Accounting is about practice. It is about challenging it. It's about going back and reading your slides and taking your questions and see what can I do? What I cannot do, then you throw the question, okay? Once somebody explains and you've made an attempt, 1, 2, you are there. The other aspect is that sometimes the questions can just vary with a slight statement. And so once you practice more, you see the nitty-gritties of how the questions can be set, the different changes we can make to questions. If you do that, it is one of the easiest subjects you can think through. Unfortunately, people think it's one of the most difficult subjects, okay, but it's because we are not practicing. So that is it. So please note that, okay, once we come to it, we are going to do that. And if I were you, with my book, I've just drawn the account and I've put it in. Recall that you would always have to bring the balances down. So you have a receivables balance that have already been done. This is an additional information which you are now recording. Okay, so if we assume that one, our receivable balance is here, but hey, look at it. We have debit here and we have credit. What balance has receivables?
Debit balance.
Debit balance. So once you open the account, the balance CD is debit. And then you do your entry. Okay, so you are bringing it down. The year has ended. There is additional information that needs to be adjusted to some of these balances. So that is what we are doing. Good. 2, so there's another aspect. Provision for doubtful debts is to be adjusted upwards by 200. Who will help us? Provision for doubtful debts is to be adjusted. Yes. Hey, nobody will help us.
Madam,
Yes,
that means we have a provision for last year in the trial balance. So it's going to be balance brought down. Like we will credit, you open provision for doubtful debt account, then we will credit that figure, which is the 500. Now they said it should be adjusted upwards, which is 200. So that means there should be a decrease for this year. So we find the difference between the 200 and the 500. So it's going to be 300. So that 300, you will be going to our profit and loss, the income statement. There should be a decrease in
some hands are
provision.
up.
So it's going to be an income.
Solomon, Lowell thinks otherwise.
Yeah, madam.
Yes, Lowell.
Yeah, I think it being upwards, it means we need to add up, not find the difference. So I think we will add up the 200 to the 700, to the 500, making 700.
Okay, so that is lower. Roger.
Yes, madam.
What do you think?
Madam, I think with the provision, the additional information is saying that the previous balance that was carried down has a previous provision which it is written upward. We add the 200 to the already existing 500. Find the difference, which is 200 still. So we debit the trading profit and loss account as the 200 as a provision, an increase in provision. So it will come under operating expenses.
Okay, so Solomon, that is where you got it wrong. So again, let me draw your attention. The statement can say that, so Solomon, I think you are coming from a perspective. If the statement says provision for doubtful debts, okay, is to be adjusted, this one said upwards, so it's automatically by 200. So this one, the statement is very clear. It says, look, increase it by 200. But if the statement said provision for doubtful debt is to be adjusted to 200, what does that mean? So these are two words, by and to. When they say it is to be adjusted to 200, what does that mean?
Please, can I try?
Yes, Roger.
And when they say adjusted to 200, it means the final adjustment should be 200. So instead of 500 remaining, we were less 300 from the 500, giving a result of 200. So our final provision for bad debt will be 200 instead of 500.
Good. So those are the tricks. Okay, so how you read the statement is what tells you. So this one says adjusted upwards. The mere fact that they say upwards by, it means they've given you an amount of figure that you should increase it by. And that is very, very straightforward. If you have adjusted to, okay, if you have adjusted to 200, then it means the final provision should be 200. The final figure for this year should be 200. And so if last year was 500, it means you are writing it down by 300. And that 300 is a decrease. Okay, so again, we have to be mindful of the words, okay, and how the statement goes. So be mindful, adjusted to, adjusted by. Okay, these are the terms that can be used. Good. So again, we have noted that one. Provisions, I have already indicated, have credit balances. Okay, and so what is in the trial balance, you would realize, indeed, if you forget whether it's debit or credit, sometimes some of them are straightforward. So if you look here, provisions, it's even under credit. It means this is the credit balance. So once you open the account, you put it at the credit side. And if it is to be increased by 200, it means that 200 is on the credit side. And that will be an increase in provision, double entry. So the debit will be in the income statement, okay, as to go to the income statement as a debit, as an expense, provision expense, okay, that is it. Good. Any question, anybody still confused? I am doing this so that when we go back, we can be able to prepare. I'm sure we'll have to do an extended class because of this if we want to prepare. Other than that, then we have to end at the exact time. So let's quickly go through electricity B. Who read the B for us?
Electricity bill outstanding amounts to 500 Ghana cedis, and a quarter of the total electricity consumed relates to trading, whilst insurance premium paid in advance was 200 Ghana cedis.
Okay, who will do the first part for us? There are two issues here. There are some people who have never spoken. Let me see. Ben, how will you treat it? Ben, you want to try?
I don't know.
Ben.
Madam.
What can you say about this?
Please, I'm listening and I'm following.
No, I want you to try. Everybody is listening and following. So you try. Try. Sometimes I like to encourage students to try. The only thing you can do is to try. And I have seen science students who have turned it around. They are even better, okay, than the general art students who come. So you should be able to. So electricity outstanding. So just that part is 500. What will you do? What entry will you pass? Or what will you do? Don't even tell me about the entry. What is the implication? Okay, Elinam.
Please, I think that means that you add the outstanding electricity to the electricity balance in the trial balance.
So that is it. So
I said I think that it means that you add the outstanding electricity. I think you add the outstanding electricity balance to the balance that is stated in the trial balance, which become 2,200.
To become how much?
2,200.
Why 2,200? Elinam, you started well, but why 2,200?
Hey,
What's the
2,500, sorry.
Okay, 2,500. So we have
no, I said 2,500.
Okay, then I heard you wrongly, sorry. So we have the amount we have paid for electricity. Okay, we have the amount that we have paid for electricity, 2,000. But the information is telling us that we have an outstanding amount. When they say outstanding, what does it mean?
Owing.
It's owing. It means as a business, we have yet 500 to pay in terms of the electricity bill. Okay, that gives us 2,500, as Elinam has said. But there is another information. A quarter of the total electricity consumed relates to trading. A quarter of the total electricity consumed relates to trading. Yes, Edmond, good. I like the vim today. Okay, people who have not spoken are talking.
Madam, please, I think you find a quarter of the total electricity bill. Then you take it to the direct cost in the trading and trading account. Then the rest will also come into the income statement.
Good. So that is it. Now let me say, if you recall, so exactly the point, Edmond, on the face of it, that is what we have to do. Okay. Indeed, this is a very straightforward one, but most often we are interested based on the matching concept of how much electricity we have consumed, not how much we have paid. In the trial balance, okay, it is how much we have paid. So the 2,000 relates to how much we have paid. And indeed, if we were doing double entry based on the 2,000, it would have been debit electricity as an expense and credit cash. That would have been the expenditure. Now we are being told that when the bill came, it means the amount we paid is not enough. We have 500 more to pay. And so the 2,500 becomes the amount of electricity we have consumed. And for accounting purposes, we are interested in the actual expenditure, not the cash paid. And I'm saying this on purpose because once we start the income statement, we will be capturing what amount of expense that relates to the revenue, not only the cash. And that is why we have to add the outstanding amount, okay, before taking out a quarter of it to trading. So that will be considered as a direct cost. Okay, that will be considered. So note that. Pakwesi, your hand was up. Paul, I'll take your question after.
Madam, I wanted to ask about a question, but you answered it in your explanation, so I'm okay. Thank you very much.
Okay, then Paul.
Madam, please, which side would the quarter of the electricity go in the trading account?
Oh, I just answered it too. So who will help Paul? Where do you think, Paul, where do you think it will go to?
Madam, please, I was having internet problems. I didn't hear that.
Okay, so who will help Paul? Okay, so who will help Paul?
Madam, Opare Benedict can help. Opare Benedict. Madam, Opare Benedict can help. Opare Benedict.
Lowell.
Balance.
Lowell.
Yes, madam.
Where will which part of the trading account will the quarter of the electricity be captured in?
Madam, please.
Who will help us?
Madam, please, you debit it in the trading profit or loss account.
Yes, it will go to the trading, but which side of the trading? Where will it be captured under? Yeah. Where?
Operating expenses. Operating expenses, please.
Madam, please, expenses.
Why operating expenses? Have we used the term operating expenses as we started teaching?
And please direct cost.
It is what?
Direct cost.
The direct cost, and that is the cost of goods sold. We'll capture it under the cost of goods sold. That is a direct cost. I told you any expenditure, okay, other costs that would cause us to sell that relates to the goods that we have sold will be captured under the cost of the goods sold. Paul, are you okay?
Madam, please, why is it going to the direct cost? What if the electricity was consumed in transporting the goods out?
But Paul, that is what the question says. In businesses, we have electricity, and we are saying that this portion of the bill that came, let's allocate it to, okay, as part of the cost of the goods that we sold. It could be that it's part of the manufacturing cost, not necessarily the sales of the goods. Okay, so if the goods we have sold for the period, we are capturing the cost, that's the direct cost. It could be that that amount relates to the warehouse. And so for us as a policy, we are capturing that as a direct cost to the goods that we sold.
Okay, thank you, madam.
Okay. Any other issue? So that is clear.
Madam, please, for this question, when we open our double entry, madam.
I'm listening. I'm listening.
Please, for this particular question, when we open the double entry, like how would the narration be?
For which
in terms
one?
of we taking the quarter of the
so
trading,
the quarter
electricity,
is a working. We cannot
how would
do
the
double.
narration be?
We cannot do double entry with respect to the quarter. Okay, so when we get to double entry, we'll see. We can do it, but it's more of a working rather than a double entry. But we'll see how it goes.
Madam, please,
okay.
No, I think we can do it. Yeah, we'll do it. Yes.
Madam, please, you said earlier that the portion that the business, the additional information has stated that it should be transferred to trading, it means it's going to form part of the cost of goods. As you add it to purchases and carriage, inwards, and all those stuff before letting closing stock. Is that what we are going to do?
Yes, because it's part of the cost. Roger, that is what the information tells us.
Oh, okay. Thank you, madam.
Okay. C. Quickly, Louisa.
Goods withdrawn for personal use by the owner amounted 1,500 Ghana cedis.
Double entry. Who will help us with the double entry?
Madam, please.
Yes, Mary. Mary, appear.
Madam, please.
Yes. Mary, we can't hear you.
Madam, please. I'm saying that we are not done with the B.
Please,
Oh, sorry, insurance premium. Okay, thank you. So, Mary, take that one for us.
Whilst insurance premium paid in advance was 200.
Mary, your voice is very faint. Could you speak up?
Hear me?
Yes, better.
Madam, the question goes, whilst insurance premium paid in advance was 200 cedis, and we had from the trial balance 1,000 cedis. So, Madam, I think we have to less it from the balance from the previous year, from the trial balance. That would give us 1,000 minus the advance, which is 200, and that will give us 800 cedis.
So again, the 800 is our actual insurance premium for this year.
Yes.
Okay, so that is what it means, implied. Okay, that the actual insurance premium we are supposed to pay, our actual expense, is the 800. Good. Okay, quickly. We'll have to prepare to a point. I'm going to do the notes, okay, the workings. If we're unable to complete, we will have to go and complete the financials. Yes.
Please, how about the treatments in the balance sheet? Once we add it to current assets, the prepaid?
Roger, I say something?
Yes, please. I'm talking of the prepaid. The amount we less from the one in the trial balance. The 200, once we add it to current assets.
Exactly. So that is I told you that everything in the additional information must be treated twice. Okay, aside the double entry, it must be treated twice. So that is the second, because I expected electricity outstanding would also go into the statement of financial position.
Yes.
Okay, so that is it. Good. C. And who help us quickly? C is a very straightforward one.
Madam.
Yes.
Please, is drawings and capital.
Drawings and capital. Why not drawings and goods?
Okay.
I'm not saying that take my position. Maybe I should have asked somebody's opinion as well.
Yes, please.
Okay.
Yes, Lowell. I'm not saying that mine is right. Okay,
yes,
but I want to test your mind. This one, I don't know how come I quickly ask. Normally, I would have asked for people's opinion.
Okay.
No, why did you say drawings and capital?
Because it's the owner who took the money.
Okay. In fact, you are right in the tail end of it. That will be the impact. Okay, but for recording purpose, yes, Lowell, I realize your hand was up.
Yeah, madam. So please, with this, it would affect the drawings and the goods available, inventory available. So with this, you debit. Madam, please said why?
No, okay, you.
Yeah, so with this, you debit the drawings account and you will less from the goods available or inventory.
Please don't tell me you will less. Okay, we know debit and credit.
Credit, sorry. You credit. Okay, madam.
Because when you say you will less, what are you lessing? Less, depending on the transaction, could be debiting or could be crediting. So it's always good to use the appropriate terms, okay?
Okay, so you would debit the drawings account and you would less, you would credit inventory.
Hello, well, you are so used to less. Okay, so you see, oh, you want me to also say less now. I refuse to adopt your words.
Sorry, madam.
Okay, but Loa, why did you say inventory? Why do you credit inventory? In other words, because inventory has a debit balance. So if you are lessing it and you are crediting it, if you are crediting it, means you are lessing the inventory.
Yes, please. That's the reason why. Yes, please, madam. That's what you just said. That's the reason why I said you should credit it in order to less it from the inventory account.
In order to less it, okay. So you are reducing the quantity of inventory that you sold, okay, for the period. So you subtract it. Good. Then D.
Madam.
Yes.
Please, it's going to be the closing inventory of stock.
So
70,000 Ghana.
So what do you do to the closing inventory?
You less it from the balance you get after you.
Okay,
subtract the net from the cost of goods.
So it will affect your trading account, and then in your statement of financial position, it will be shown as what?
Please, in the statement of financial position, it will be treated as a current asset.
To be treated as a current asset. Okay, so that in effect shows the dual treatment. It will be shown as you will less or you reduce the inventory. Remember, your cost of goods sold, you are also interested in only the cost relating to the amount of goods or the quantity of goods you have sold for the period. Okay, so anything that does not relate to the period must be taken out, and the inventory at the end of the year. Okay, if you recall, at the beginning of the year, there is inventory. We had 60,000 from last year. Then we went to buy some of the goods. Then we sold. Okay, and at the end, we have goods worth 70,000. Now that 70,000 belongs to next year. Okay, that is why we have to take it out from our trading account. And in the statement of financial position, it shows that we have inventory translated in cash, which is an asset to the business. And that is why we show it as a current asset. Okay, but that becomes the opening for the next year. Good. The last one, depreciation, I don't think we have any challenge. So I'm going to, again, you people have it. Somebody is suggesting that I should open it on my phone. Okay, so I open on my phone and I go back and I open. They won't finish today. So students must always partake.
Hello, madam.
Yes.
Yeah, madam, the goods withdrawn the owner of the business. My brother's inventory. So which one are we taking for? Is it the opening stock or the closing stock or the purchases?
Oh, Solomon.
Madam.
Which one are you referring to? Okay, Lowell. Today, Lowell is doing our show.
Okay, so with this one, the goods withdrawn, you take it from the cost of goods available for sale. That's during the trading account, you will less it from there.
Okay, thank you.
Okay, so it is good when students participate. So if I decide to look on mine and answer it, okay, students will never participate. Everybody will just be doing. So let's participate as we go along. So I'm going to stop sharing. At least we have gone through it. The rest, so where there are no issues, we just pick it into the relevant report. Okay, so for instance, capital, there was an issue because you know that the goods must affect it. You see advert here, there was no issue, so you can just put the figure. Salaries, there was no. So in accounting, there are free marks you can always get. And let me even tell you, I think I mentioned this to the class yesterday, that this is a highly possible question for your final exams. Not the same question, area, okay? Preparation of financial statements, because that one captures everything, all the things we have done, okay? But don't go and quote me that I say it will come. I say it is a highly possible area. And I'm sure we may have one more class that will tell us which area. But one thing I can tell you is that everybody is going to be physical exams. The final exams is going to be sit-in. Yesterday, one of the students tried to argue that why is it that if we are doing online, the final exam too is not online? Okay.
Yes, madam.
And I told that student that that determination is not for the student to do. The university has given options to lecturers. Okay, the student came back asking me if we are doing online, why should we do physical? It means that for the teaching, we could have done physical. And I told the student that nobody is disputing the physical. The only reason why we are not doing physical is because of classroom unavailability. You are 250 students in one class. At the business school, no class is up to except A1. And so on a normal day before COVID, okay, the students were sitting very packed. And I don't think it will augur well for us as a university if we should get students all seated packed like that. Okay, and so that is the situation we find ourselves. Do you think I enjoyed this? If I was holding on to my paper and come to the classroom, everybody would talk. I'm not even mentioning names, but everybody would talk. But it is quite difficult for us as well. So don't think that we are happy with what we are doing. But when measures have to call for, situations have to call for measures that are not nice, we all have to fit in. Okay, you people are even computer-born babies or whatever you call yourselves. Okay, not some of us who it came to meet. So please, let's all try. It's not the best, but we'll have to do something.
Madam, please, with the physical, we will also sit in 250 or it will be.
Roger, I didn't quite get you.
I'm saying that with the exams, the physical one, are we going to sit? Which number are we going to sit in?
Which?
Like how many numbers to
the physical exams, you do it in this thing. You people are now in 200. So it looks like you haven't even sat, but you sat for one physical exam. So if you have to sit in the end block, for exam purposes, the exams halls have already been spaced. Okay, but for classroom teaching, we don't have the luxury of spaced classroom already like the exams, because exams are scheduled. Okay, the courses are so many, we cannot schedule them. So that's the challenge. So anytime students would have to do workings and clearly show it. So I'm going to start with the workings based on the additional information we have. Okay, and I expect that we will all follow through. So the first one, still the T account. What is the first one?
On 30th December 2017, Joycelyn decided that 1,000 Ghana cedis of the receivable balance should be written off as irrecoverable debt.
Okay, so receivables. Receivables account, we know that receivables is the same as what?
Debtors.
Debtors. Okay, so you must be mindful. Okay. It is 31st, 12th. So I may not put the various headings, but please make sure you are putting your headings. Those are the small things that sometimes attract marks. Okay, that can move you from a B plus to an A, or from a D to a C plus or a C. So please be mindful. What is the year end?
2017.
Okay. So this is the working. So balance what?
Forward.
Brought forward or brought down, whichever way. Okay. How much is the receivables balance?
15,000.
15,000.
15.
15,000.
That way.
15.
1516.
Okay, 15. Good. So this is from the trial balance. The balances at the end of the year from the transactions that have happened are carried down into the trial balance. Now there are additional adjustments and information that were not captured in the year. It could be an oversight. And so that is why the additional information must be treated twice. Okay, so good. So what is the issue there?
1,000 of the receivable balance should be written off as irrecoverable debt.
Okay, so we are writing it off as irrecoverable. So 31st to 17. It is
Bad
what?
debt written off.
Bad debts. So it goes to the bad debts account. Okay, how much is it?
1,000.
1,000 cedis.
1,000 cedis. That tells us that we need to open the bad debts account. Okay. So the bad debts account. What balance? Do we have the bad debts account balance?
No, please.
So double entry, this is debit, this is credit, this is what? Debit.
We can't see the arrow.
Come again.
We couldn't see the arrow. You were like, this is debit, this is credit. Then you were like, this is what? But we didn't see the arrow.
You are here. Mm-hmm.
1,000.
What else? So double entry is complete.
Madam, please, the date for the bad debt, it was 30th December.
Okay, so you put it there. If I have to change it, it means I have to wipe all these things. Okay. Sometimes that also. So please, everybody take note. The date is 30th December. Okay, so put receivables 1,000. Okay, double entry has been fulfilled. The next one, quickly.
Provision for doubtful debt is to be adjusted upwards by 200.
So we have to open the provision for doubtful debts. What balance has provisions?
500.
So it has a credit balance, so we must pick the balance brought forward or brought down. Brought down. How much is it?
500 cedis.
500. So what account would we open? What is the issue there?
Written up an extra of 200 cedis.
So 31st, 12/17, it is additional what?
Provision.
Additional provision. And you see, because we want to see where it will go to, I'm going to represent this LI/S. What does that mean?
Income statement.
Income statement.
Income statement.
Okay, so that is the double entry. That is the double entry as an expense. So we can have expense, okay? The provision expense account, doubtful debt. So that is it. But we send it directly to income statement. Any other?
Whatever we record, we can also put I/S.
Roger, I can't hear you.
When we are recording, can we also put I/S?
Why not? If you understand what you are doing.
Okay, I think maybe
So that one is because of you people that I'm doing it, so that you can, your mind will tell you that this one goes to income statement. Okay, it's because of you. So workings 1, you have to label your workings. I forgot to let you know. Workings 2. Workings 3. And as you go along, okay, sometimes the figure may be wrong, but your information may be right. And so if you are taking for the right figures, put at the right place, you are getting your text. Okay, so even though the financials may be wrong, once you put workings, you may attract some marks there. What else?
Electricity bill outstanding amounts to 500 Ghana cedis, and a quarter of the total electricity consumed relates to trading.
So electricity bill, electricity account, okay, that will be workings 4. Workings 4. Do we have a balance? It's a debit balance, so 31st December 17. Balance brought down. How much is the electricity bill?
2,000 cedis.
2,000. Outstanding. If it is outstanding, where will it be? Debit or credit? We are interested in the amount of electricity we have consumed for the year. So where will it be?
On the
debit side.
On the debit side. Okay. Was there a date? Was there a date, a different date?
No, madam.
Okay, so 31st December 17. It is outstanding. Okay, so electricity outstanding. And this one will go to the statement of financial what? Position as outstanding. Okay. And how much is it?
500 cedis.
But there is an issue here.
Yes.
So let's do additional workings. So I think we should have brought it here. 31st, 12, 17, trading account. I didn't do this yesterday. Trading account into brackets. Okay, or we can do additional workings here. Yesterday I did additional workings here. So W5. Trading account.
And I think it should go up because
What percentage? Who are those disturbing the class? What percentage? Solomon, you are disturbing the class.
It's
What percentage is going to the trading account?
A quarter.
A quarter, so it's 25% of what?
202,500.
And the difference goes to what?
The trading account.
So in the income statement, 75%. So you see, you are not contributing. The few who are contributing, when they give us the wrong figure, then we are crying. So that is it. So how much is the trading amount?
125.
25. It means that at 31st, 12, 17, the balance carried down. Okay. Balance CD, which will go into what? Income statement. Will be how much?
1875.
1875.
1875. Are we okay?
Yes, please.
We can balance off these accounts. And this is where you need to know where each of these accounts go to the balances. Receivables, where would you find receivables? Income statement or statement of financial position?
Statement of financial.
Good. So the balance carried down. If there is no other additional information, and we are doing 31st, okay, 12, 17, the balance carried down.
14,000.
We'll go to the statement of financial position. Okay, and that is how much?
14,000.
14,000. Again, okay, so that is what you know. And by now, everybody should know that the balance CD becomes BD, and it's the balance that is saying we are sending to the statement of financial position. Okay, bad debts, where will it go to?
Statement of financial position.
Statement.
Income statement. Income statement, please.
Okay, income statement. And so if we're balancing this one off, 31st, 12, 17, okay?
IS.
We'll just put IS to show that the whole balance is going to, there's no balance, so it's the whole figure, 1,000, okay?
1,000.
Any question before we continue?
Yes, madam. Madam. Yeah, madam, please, I want to ask, within the final exams, is it really needed for us to show workings?
Yeah.
Who is asking? Who is asking the question? I want to know who. Is it Dennis?
No, madam.
So who asked the question? What did I say in the course of this answering this? What did I say?
But he said workings show we give you the max.
Workings?
Is that what workings? Our workings is what will contribute to the max.
Exactly. Your workings would also be marked. So if you are not showing workings and your calculator, one thing students must know is that you are working under pressure. And so if you are working under pressure, these are figures. If you write, instead of 14,000, you write 1,400, it is wrong in the statement of financial position. And I cannot come and be in your head to know that you are writing 14,000. So to help do that, it's always better for students to show workings, okay? Of course, at the higher levels, sometimes the workings are in the statement forms. But this time, because we have shown you how to prepare accounts, that is why I'm doing all this. When I used to teach level 400, I don't even have time to do this. I will not sit and do this, okay? Because those ones, they have overcome this. And so when we take the thing, they know what to do. Okay, so please, workings is very, very, very important. Okay, otherwise, if you just take your calculator and you punch, if you punch a wrong figure, it is wrong. But you would realize that when we open the receivables account, the 15,000 we just picked from the information, you don't need to stress yourself. You don't need to stress yourself. The provision for doubtful debt, 500, we picked from trial balance. You don't need to stress yourself. Meanwhile, when we are marking, we are taking the fact that you have put the 15,000 under receivables and at the debit side. That is the principle. Okay, so it is not only the final figures we are interested in, we are also interested in your ability to get the principles right. So if you just punch and give me 14,000, if you have opened the receivables account, how many ticks are here? 3. But if you punch and you give me 14,000, you've got 1 tick. Okay, and accounting, the more ticks you accumulate, the higher the chances of you getting a higher score. Are you okay? Should we continue or we should close?
Continue.
Madam, please, let's
continue.
Okay, so we are going to continue and quickly, we are going to continue and quickly finish the workings, and then I'll just show you the financials, what the content should. Indeed, the financials, you already have it, so you should be able to fill it in. We need to finish up with the workings. Yes, Louisa.
But please, we didn't balance the provision for bad debt and transfer it to the.
Yes, so balance it. Okay, I cannot. Where should provision for bad debts be? You should ask yourself and know where it is. Okay, so please, you need to balance it. So let's go to working 6. Louisa, your hand is up quickly.
Yes, madam, please, with the workings, in case we write in shorthand like the SOFP, will it be allowed, or you have to write it in full words?
Louisa, I told you that I am doing all those purposely for you people. Okay, so that you know that this balance on this account goes to statement of financial position. So if you do it and you don't bring it to me, I don't mind. I'm expecting to see this there because I know it.
Okay.
You get it. So nobody will penalize you if you put IS. The best thing you could do is also to put it, okay, what SOFP is statement of financial, IS is income statement, okay?
Okay.
Anytime you are not sure of something, put an assumption, okay?
Okay.
Madam, please, can you balance working 3 for us?
Please balance it. You're even lucky I'm balancing. Yesterday when I was teaching, I didn't balance for them. Okay, but because I thought we will not have time, that's why I decided to balance the few to show you. I didn't balance for them. So balance it.
$700.
But this is not any issue. We have just said this one is going to income statement. So where should the balance go to? And I think Paul asked the question and I clarified it. Hmm?
Yes, we did.
Yes. So quickly, which one is the next one?
Insurance premium paid in advance was 200 Ghana cedis.
Any balance on the insurance account?
1,000 Ghana cedis.
What balance will it be?
Debit
balance.
Okay, so again, you look at your trial balance and see where it is. All expenses have debit balances. Okay, but that doesn't always mean that on the trial balance, it will be. It could be that there is a prepaid from last year. That will make it a credit. So please, in as much as we know it is, just take time off and determine, okay, whether we even overpaid us at the end of the year. Okay, so balance brought down. How much is it?
1,000 cedis.
1,000
Cedis.
100. What is it about insurance?
Prepaid insurance.
So at 31st December 17, there was a prepayment. And where does the prepayment go to? Statement of financial position. So we realize that all the transactions that appear in the additional information, we are treating them twice. Okay, so it's affecting the insurance account and it's also going into the statement of financial position. So we can balance this. If we are balancing this, I'm not supposed to be doing all this. Where will the balance go to?
Trading profits. Yes, trading account.
The income statement. Okay, so the difference will go to
Yes,
the
trading account.
Okay, why trading account?
Madam, because that was the outstanding amount and there has been a prepaid of 200. So after moving it.
Is the income, when you say trading account, I've already, you see, we have established a principle. The trading account captures the revenue and the expenses directly relating to the product. So if you say trading account, then you are given a wrong information. So it's the profit and loss account.
Yes,
Any
madam.
other? Quickly.
Goods withdrawn for personal use by the owner amounted 1,500 cedis.
1,500 Ghana cedis.
So what accounts are we opening?
Drawings account.
What balance has drawings account?
Debit balance.
Debit balance. Okay, do we have some prior information? Is there any previous balance?
No, please.
So goods. Let me do inventory.
Inventory.
And that will be in the what?
Statement of financial position.
Are you sure?
Madam, please no.
How much was withdrawn by the owner?
1,500.
I thought we had already established that it will go into the trading account, that figure. So why are we? So you should go to the trading account, inventory. So if we're opening inventory account, then we would have credited our inventory. Okay. What else? People.
Inventory at 31st December was valued at 70,000 Ghana cedis.
Okay, so that one we'll treat it in the trading account and in the statement of financial position. What else? Let's go to the next one.
Depreciation is charged on cost at the following rates: on fixtures and fittings 5%, and motor vehicles 10%.
Okay, so depreciation. So let's do some workings on depreciation. On motor vehicle is how much?
30,000.
What is the method?
Read
it for me again.
Depreciation is charged on costs at the following rates: on fixtures and fittings 5%, and motor vehicles 10%.
So please take note of this. They said Daniel Kujo, Solomon. Solomon and Daniel. Depreciation, if you look at it, this one says it is on cost. Now, there are times they will ask you that depreciation is on net book value. If you look at the question you have, I think the question 2, okay, it says using the reducing balance method. And if you are using the reducing balance method, okay, you would realize that it will give you the cost of the asset and the accumulated depreciation. So any figure under depreciation will be the accumulated. And to get the reducing balance, you must take the accumulated depreciation from the cost before you calculate. In this instance, it says on cost. So if there is no depreciation in the question, then the the motor vehicle amount there.
YouTube recording, Nana.
Okay, is the cost. So we must take note of that as well. Mary Ewenam, Roger.
But please,
What
there's
is
no
the
noise
percentage?
in
Is
my
it
background.
5% or 10%?
10%.
10%, madam.
And how much is it?
Inventory trading.
And then what else?
Fixtures and fittings 5% on 10,000.
Fixtures and are you sure it's 10,000?
Okay, so you need to open the depreciation expense account. And what balance has the depreciation expense account?
That's a debit balance.
Debit balance.
So 31st December. Motor vehicle, which will go into the, where would the depreciation go? This is an expense account, so it's already, we know that it will go to income statement. What is the balance? 10% is how much?
3,000.
3,000.
F&F. And how much is that one?
500 cedis.
Okay, so I guess we are. Any other?
Madam, please, I wanted to ask some quick question on the treatment of depreciation.
Yes.
In case the question instructs you that you calculate the depreciation on space line method, that's on the cost, and there's an existing scrap value, you ignore the existing scrap value and apply the rate.
Why do you ignore the scrap value? But I thought that we did that under depreciation.
Yes, madam. In some questions, there are some direct instructions for you to apply directly.
So in all that, you look at the question, okay? You look at the question, but largely you cannot ignore the scrap value. Okay, to be the amount minus the scrap value divided by the number of years. That will give you the straight line.
Okay, thank you, madam.
Yeah.
Madam, please, I have a question.
Yes.
Please, madam.
With the format you gave us, drawings is supposed to be less from the owner's equity in the statement of financial position. But with this question, we are sending it to the trading account, please. So I want to find out if, in which case should drawing be less from the owner's capital? Is it when it is cash drawing, or it is goods drawn now from the business, please?
Sorry, Johnson, I didn't get your question.
Madam, please, I was saying that the format that you gave us in the statement of financial position, we are supposed to less drawings from owner's capital. And then with the workings, we are sending the drawings rather to the trading account, please. So I want to find out if there is any case that we have to send the drawings to the statement of financial position to be less from the
Did we send it to the trading account?
Yeah, with the one we just did.
Please, I don't think we sent it to the trading account. So you are not paying attention. Have we balanced the drawings account?
No, yet, madam.
So you cannot say that we sent it to the trading account. So you must just be mindful of what we are doing. Okay, I don't think that I have sent the drawings to the trading account. So if I put inventory, the only reason why I put inventory into trading is that the other, so if we're doing double entry, the inventory would have been debit and the drawings will go to trading account. Is that not what we said? But when we balance the accounts, is the balance that will go to the capital account.
Okay,
are you clear?
Yes, please, madam. Okay, thank you.
So if we're doing double entry, which we should have, then the other entry would have been inventory. And the only reason I put the trading account there is for you to know that this amount relating to this inventory would be affected in the trading, just like how I've done the statement of financial position. But it doesn't mean that that is where it will be affected. Okay, that we haven't balanced it. If we balance it, the balance CD, okay, it's what will go to the capital account. And if you realize it is a debit balance here, so in the capital account, it's a debit that will go there against the capital, which is credit, to reduce the capital. So balance it and know where the balance is going to, not the entry. That's where you are getting confused.
Okay, madam. Thank you very much, madam.
Yeah. Okay, so let me quickly start this. I wanted us to finish by 5. What is the name of the business?
Ghana Dubai Enterprise.
Ghana Dubai Enterprise.
Ghana Dubai Enterprise.
Very necessary. Okay, so we are preparing it in the books of Ghana Dubai Enterprise. That is what it means. Okay. For some, they will tell you to put in the books of, so that you don't get confused. You see, in the books of Ghana Dubai Enterprise. So this is income statement. Income statement. And I told you, income statement is always prepared for the period. Okay, so for the year ended, this one you must state the period 31st December 2017. Okay, very, very critical. These would all attract some marks. Okay, so here I have the DHC, 2 columns, just to make your work clear. So if there are a lot of figures, you can put it here and then put the total figure here. So we have sales or revenue. How much is our sales figure? Are we there?
150,050.
How much?
150,050.
Sales should have which balance, credit or debit?
Credit.
So you should be able to tell. Is there any returns?
Yes. 250.
So we have sales returns.
Yes, madam.
How much is the returns?
250.
150?
250.
250.
250.
So straight away, we have our balance, which will give us the net sales, which will be the net sales. Okay, then we come and less the cost of goods sold. Okay. And under that, format is there. So this one, you're only copying format. So as some students will say, Chu Baba, opening stock. How much is our opening stock?
60,000.
60.
Yes, madam.
We have purchases.
Yes.
Yes.
How much is our purchases?
80,000.
50.
80.
8.
Okay, so
$80.
to give us 140.
Yes.
140.
And then you less what? Is there any additional cost there? Do we have any carriage costs?
The drawing.
Sometimes we ought to look in. Yesterday they didn't before we said.
Revenue.
Huh?
Madam, there's returns.
There is returns. Which returns?
Where is the
do we have?
return?
It is there. It is there.
Which
Return
return
there's
are you
return
about?
outwards.
Return outwards.
There's return
There's the return
outwards.
outward.
So
Yes,
we have
please.
to return outwards, return outwards. What will it do to our goods? Will it reduce it or to increase it?
Returns from where?
It will reduce it. It will reduce it, please.
Do we have return
Reduce it.
outwards?
Yes, please.
Yes, please.
Okay, we have
Reduce it
return.
competitive.
How much is it?
200.
200, please.
200.
How much is our returns?
200.
And I'm 200.
200. Any other?
Madam, the additional information, it says a quarter of the total electricity relates to trading.
Returns, are we lesson? So please,
Yes.
we can, you see, we are lesson. And once you don't, okay, so I should have put it into brackets once my thing is off. So returns reduces the amount of goods. Remember, we are interested in the cost of the quantity we have sold. Okay, so we must arrive at it. What else? Returns. What about the drawings? Remember the drawings from the owner withdrew some of the goods, so that is not part of what we have sold. Okay. The drawings of goods drawn by the owner, how much did he withdraw? What is the value?
1,500.
Any other?
Stock.
Any other?
The additional information says quota was of the total electricity relates to trading.
The what?
A quarter of the total electricity.
Okay, electricity, good. Electricity, good. So the electricity, so you see, these are the things. Okay, electricity expense. How much is it? What do we do? Do we add or we subtract?
We subtract 625.
We add, good. So electricity would add to the cost. So we add, how much is it?
625.
625, so 625. So if we wanted to, we could have put workings here. Just a minute. If you cannot do it and you can do your 25% of 25 here, it is also a workings. Okay, but what be, you don't just put 625. If instead of 625, you go and put 652, because the mind in exam room is working very fast. It means you have got it wrong. But if you put into brackets 25% of 25, then you know that, okay, even if this figure is wrong, you would have got the workings correct. Again, if you did it separately and we come here, once you refer to the workings, we'll mark that correct. Okay. What else? Then you less what? How much is our closest stock?
Closing stock. 70,000.
So whatever you have here, okay, if you have finished adding, put it here. How much are we getting? You didn't give me the net sales. I guess you go and complete it. What is the value here?
68925.
68,925. Yeah.
68,925. 925. Okay. And that is a less. You see, the heading is less the cost. So this is supposed to be less. Okay, so maybe we should have put it in brackets to show that it is less. So to give us our gross what?
Profit.
Gross profit, okay, which will be here. And that is how we construct the income statement. So anything that is not here, so the next one are the list of expenses. And so let me just take even one. Insurance, okay.
The net profit is?
Now, when you take insurance, there's a workings there. So you pick the workings number. What is the actual insurance for the year? Okay, I guess it was 800. There. Now, one thing students should be able to do to pass. Yes, Lowell, I'll pick your thought very soon. We'll be closing in the next few minutes. You have to go and complete it. One thing students should note is that on the question you have, there are what we call a lot of free marks. And why do I call them a lot of free marks? There are some expenses you don't need any adjustments. So you just have to put them on there, okay, without the least thought. And if you go through what you have, if you see we have advertising, it's a debit balance, it's an expense. There was no additional information on it, so it's a free mark. So you just carry it expense, you put it there. Salaries, there was no other information, so you put it there. Rates, okay, no other information, you put it there. So you people, you see, before even the expenses, there is discount. We didn't take note of discount. So there should be discount received, which is an income. Please. So please, I'm going to clean the expenses there. You have to bring discount. Okay. So and then there's general expenses. All these I have just mentioned don't require any adjustment. And so you could just put it as expense, free marks. Okay, we call them free marks in the question. So I'm going to clean this one because I've just realized that there is discount received, which would, okay, so discount received, which will add on, okay, and others which are there. So you have to add them on before you do less expenses. Then you go to the statement of financial position and also construct it. Any question? So again, go and complete it. Johnson, any information as to the TA? Or Roseanne? Any information, Johnson or Roseanne?
Hello, madam. Please, Sana was saying that you wanted to have a face-to-face meeting with us.
Come again. Hello?
Yeah, madam.
Yes, Ben.
Madam, Sana was saying that we should find a venue at UGBS so that you can have a face-to-face meeting with us on Tuesday.
Yes, that face-to-face, Ben, you people disappointed me, especially you. We had agreed to have the class, and I had made time out of my schedule to have, and if the class was not going to come on, nobody told me. Sana came back, I had a class with the other group. And so I told them that because it was a holiday and those who had showed up, I was going to have a class. But you people, your class has not come on. Whether you people join today or not, I don't have a problem. I don't know what I'm going to do. So I'm going to have that